Tell us more about the equator principles and how it's helped banks in particular apply more conscientious models of investment.
Well, it's an interesting story. I'll try and keep it brief, but a number of equator banks, what are now called equator banks, came to IFC in 2004 asking about what our suggestions were and how they manage some of the environmental and social risks that were really becoming a threat to their business, their banking businesses. And very quickly they adopted, some 6 months later, it was a fairly fast decision, they said they would follow IFC's standards. At the time, in fact, we did not have the current performance standards. We released those in 2006. It's what we consider to be a really important risk management framework covering environmental and social issues across the full spectrum of potential impacts that a company could meet on the ground when it's implementing its business. So the equator banks, after looking at a whole range of ways of managing this, decided that IFC's performance standards, which we use globally, would be a good way for them to start managing risk. And we've really had a pretty good relationship with equator banks, and the number of institutions that have joined and followed equator principles have grown substantially since the 4 founding members back in 2004.
Could you just talk us through some of sort of the key principles that apply?
Well, the equator principles, the ones that I will talk to about is the principle that whereby they manage environmental and social risk through reference to IFC's performance standards. These performance standards there are 8 standards. Starts off with a management system. There's a requirement for a company about how they're going to manage environmental and social risk. And then there are 8 standards that are thematic in nature, covering a range of things like pollution control, how to deal with resettlement, indigenous peoples, cultural heritage, a range of issues like that are thematic in nature and covering all sorts of industries.
And local African banks, have you engaged them on these equator principles, and what's the response been?
We have directly through IFC's own performance standards. So a lot of IFC's business, in fact, is with financial institutions. In fact, over 40% of our overall lending program, last year it was $12 billion for IFC's own account. Another $5 billion we mobilized from banks that participated in IFC loans, so 17 billion in total. And 40% of that total business has been handled through investments and support to financial institutions, including local banks here in Africa. So when we do that, we talk to those banks, depending on the nature of the risk that they're exposed to, how they might be able to manage that risk through application of the performance standard.
And now you're wanting to engage the mining sector. How challenging has that been?
Well, I think we have seen very willing participation from mining companies. The mining companies, just because of the nature of the footprint and the potential for serious impacts on communities in mining areas, jurisdictions, recognize the need for good environmental and social control. And in fact, there's this concept of social license to operate, that without support from the community, it's very difficult to operate a mine. Of course, everything depends upon implementation. We can talk about standards ad nauseum, but unless the implementation is really good, then the results don't flow from that.
The reason I'm asking about challenges, and I underscore the word challenge, is because there are legacy issues in mining. The mining investors have often been accused of being very quick to extract resources from the earth, but give very little back to communities. Often mining towns don't have schools, clinics, basic infrastructure, and there is a sense that it is the responsibility of the mining house to help provide some of those.
Well, that is true, but this is a shared obligation with government and the mining companies. Certainly we fully recognize the need of mining companies to behave responsibly and to have community development programs that help on things such as, potential for, in some cases, schooling, education, training, etc. But of course, this should be done in partnership with government. It is not the role of an individual company to replace a government here. And in fact, we would be very concerned if mining companies were creating dependency on them for social services. So it is a partnership that's a delicate balance. And part of this is how do governments, in fact, utilize the flow of proceeds that come from mining companies, whether it be by way of royalties and taxes, and how much of that actually goes back to local communities. So I think it's a partnership that needs to be there.
I mean, it's a conversation that's going to continue, particularly as resources drive economic recovery in many African states. And the question is, how can mining companies invest with a consciousness a little more cleverly? And, I'm asking you on the basis of the royalties that you're talking about, the corporate taxes that they're talking about. Is there an effort to create funds, social funds maybe, by mining companies that would help support some of these initiatives?
There are many ways of doing this, and one of them absolutely is through the creation of funds that can be used by the community. And an important part of that is building capacity in the community, so as they access those funds, they have the knowledge, the tools to be able to use that money well for the benefit of the community. So that is certainly an important aspect. One other thing, though, that I should mention that we see as equally important is transparency on these issues. Transparency of the mining companies and how much they're paying in terms of taxes and royalties that are out there, and also in governments and how they're using those proceeds.
Another element would be equity issues in Africa. Who owns the minerals?
Right.
Who has a say in the running of the company? And to the extent that these principles apply, how do you deal with the issue of equity and local ownership?
Right. That is something that's not addressed specifically in these principles. These are the principles that we would expect a mining company to use in terms of how it operates its business on the ground. But this is an area in which IFC is deeply concerned. The issue of equity. As a development institution and member of the World Bank Group, we have an obligation when we go back to our board, member shareholders, our country representatives, that we are supporting a fair deal. So this is very important. Now, in terms of the equity and ownership, what we see certainly in the mining industry is of paramount importance is the efficient exploitation of a resource. And then for the government to set up a mechanism by which it gets a fair share of the proceeds. We do not believe that government taking risk-taking equity stakes is a sensible way to use proceeds. However, we certainly recognize the political reality in some cases of having some ownership stake. But that should not detract from the incentives that a private company has in operating its business efficiently.
You mentioned environmental issues and that level of consciousness. We do know that mining houses, as well as other big industrial players, have been regarded as major polluters of the earth. And of course now we're talking about carbon emission taxes and carbon taxes and carbon credits and those sorts of issues. What level of consciousness is there about climate change and environmental issues at this stage?
Well, I think the mining industry, like any other major industry now, is very much aware of the global concerns about climate change. And we are seeing, and in fact IFC is often trying to help companies in terms of energy optimization, resource efficiency. Water, of course, is another important issue that is impacted by climate change. So we see a lot of awareness about this now in terms of companies. What is easier to manage is new investments. Of course, in terms of existing investments and retrofitting and handling that in that way, that's often more of a challenge, but it's an important one that we often would like to support.
Okay, and then just as a final question to you, the principles exist, the dialogue has begun. What else needs doing?
Implementation. As I say, we have, we think, excellent standards, but the outcome is only as good as the implementation of those standards.
And what's hindering you?
There is nothing that is hindering us now other than energy to get on with it, to get more people involved in adopting these standards. The Equator Principles have been a great way to expand the application of IFC's performance standards, and we very much look forward to expanding their use with financial institutions and other institutions in this goal of improving performance.
Okay, the final question then, in that regard then, are you prepared to sort of do some work with a bourse like the JSE, for instance, that has already introduced an index on environmental and social issues, where it literally gauges listed companies on the basis of broad-based participation, environmental consciousness, social awareness programs. It already has an index and possibly could support this initiative.
Well, we'd certainly be interested in having a discussion. Whether that would be something that could result in an application in terms of our own performance standards is another issue, but we think the goal we certainly share.